What's going on, ladies and gentlemen? This is Danny from Markets Protocol. In this video, we're going to talk about a very important topic here, which is breakouts. Waiting for candles to close, making a decision, and looking into the next candle's movement. Okay, so this is an important topic because majority of your losses, if you really look at it, are based on this concept here. Okay, without waiting for candles to close, you don't know if the decision is made for price to go in a certain direction. So we will elaborate using, hypothetical examples here, as well as I'm going to show you a previous market example from last week on Friday where price did not close below a certain support level, a demand level, or below a liquidity area, and price could not close. And we continued the other way. So that's going to serve as a good example. And on top of that, there is one of our good traders who took a trade based on that idea as well. So just sit back, relax, start taking notes on this video, and this video will help you a lot in understanding the breakouts and why it is so important for candles to close in the first place. Okay, so without further ado, let's get started over here. So define a breakout. What is a breakout in the first place? A breakout is simply when a candle decides to close below a either support level or a resistance level. So let's just say the support is at the bottom here, and on top we have a resistance. Okay, so what do you need for a breakout first? To define a breakout in simple terms, you need a candle closing above that resistance. Same thing goes for a breakout towards the downside, which is looking for a bearish candle to close below a support. Okay, this is a simple price action textbook idea of a breakout. Normally, what happens after this, if let's say there is a support level, you wait for a candle to close, a candle closes below support, what can you expect? You can expect the next candle to, continue towards the downside by breaking the low of the previous one. That's how simple it is. Okay, and when it comes to the breakout towards the upside, a bullish breakout, same thing. You can expect the next candle to continue going bullish because we have closed above a resistance. This is a simple technical example of a breakout. Okay, now it does get complicated when you start considering supply and demand levels, zones. Okay, so this video is made for that, for you to understand a little bit more advanced concepts too. Okay, and this will help you trade much better going into your next trading session here. Okay, so the example that I want to talk about based on, let's just say, previous market example, we will talk about it, but just to make the idea a little bit more clear, what I will show you is another example here. So this will be example number 2. The first one was very, very basic. Everybody technically understands it, but let me show you a little bit more clear example here. Let's just say we're talking about a bearish breakout here. So let's mark it up as a bearish breakout, which is simply waiting for a candle to close below support. So we will write down close below support level. Okay, so this example will serve that idea. Okay, let's bring that back. Highlight this as red. Bearish breakout, which is simply waiting for a candle to close below support. Okay, this is the simple idea. You're expecting the next candle to continue going bearish, okay, after the breakout. That's absolutely correct. Now let's get a little bit more advanced into it. Okay, there are a few things you need to consider. Number one, looking left, you need to make sure you have clean range on the left. Some people also call it imbalance. Okay, you need to make sure there is big enough range pip wise. Let's just say if you're scalping, you need at least 20 to, let's say, 30 pip range for price to continue down. And you're going to make sure that we are not at a demand or liquidity area or the zone. Few things I'm going to highlight here. Okay. So looking left, we need to make sure we have clean range. How does a clean range look like? So let's say you have a breakout. You're expecting next candle to continue going bearish. In order for price to print clean candles coming down like this, what do you need from the market previously? You need the same thing from the market previously. That means either on the left-hand side, we need to have either clean bearish candles previously, or we need to have, let's just say, previously, looking left, bullish candles. Okay, which just simply indicating we have, previously clean range for price to move further down the next time. Okay, so let's just say this is the area for the breakout. Next candle breaks below the previous. We continue going down. Looking left, we have clean range. As long as you have a clean range, you're trading at a time where there's good and high volume in the market, you can expect the same thing that happened previously over here to happen over here. As long as you have clean range, you have a big enough range, you're trading at a time where there's good volume, strong volume in the market. For example, London session starting at 3 a.m. Eastern Standard Time, or going into NY open session, New York session at 8 a.m. Eastern Standard Time. Those times will carry good and strong volume for price to continue with a lot of momentum. Okay. And lastly, you need to make sure that we are not at a demand or liquidity area or the zone. Okay, because if you are disregarding this and expecting price to move down, then it's not going to happen. Very likely you will be faced with a rejection instead of a clean move down. Sometimes you do have breakouts, but even after the breakout, price could not continue going bearish, or let's just say in a bullish scenario does not continue towards the upside after closing above resistance. The simple reason for that is you did not see, looking left, there could have been a supply area, there could have been, a rejection zone, could have been a liquidity area. Price will come into there and most likely reject, and you will not see a clean reaction even after a breakout. And what turns that into? It turns into a false breakout, which we also will talk about in this video over here as well. Okay, so this was something I wanted to highlight. Number 4, I want to add into here, which I forgot to add, is trading at a time of high volume in the market. High volume times, you can expect London session as well as NY sessions. Okay, NY session simply stands for New York sessions. Okay, so this is what you need to remember, and this is still the basics. Still the basics. When we talk about the actual market example, this is something is going to be advanced for you, and we will look more deep into it to hopefully, benefit you from this concept here. Okay, so let's actually get down right to the example here. Now it will start to make sense to you because we talked about major stuff here. Let's go and look at the example here. Now this is 5-minute time frame on gold. The structure we're looking at has been printed from Friday, December 30th, I believe, during New York session when we were trading and streaming live on gold here. Okay, so looking at the price action here, ladies and gentlemen, I'm going to start right from the beginning here. This is a rejection. Okay, you see strong bearish candle closing there with a wick in the bottom, strong rejection here. Candle closes bullish. We have support formed as well as a demand for price picked up from right from this area. How do I know there's demand for price from this area? Look at the reaction of price. Okay, so I came in the morning, I looked at the charts. What did I see first? The first thing I noticed in the 5-minute time frame is we have rejected here, formed demand, and as a result of that demand, we continue towards the upside, breaking above previous resistances and rejection zones. So it was strong enough to break those rejections and continue towards the upside, creating new highs. So that makes me believe that we have demand for price over there, and that's the reason why we have traveled from a lower price level, which is from 1815, and made highs at 1820. So close to 50 pip move towards the upside from there. So that considered demand. Perfect. Now, then we look at the highs here. These highs are formed around 6:40 a.m. Eastern Standard Time. If you look at the time in the bottom, okay. After we formed that high, we started to consolidate a little bit over here. Okay. Now, in order for price to continue going bullish, we need pretty much a either rejection from the downside or pretty much creating a stronger support for price to continue going bullish. Okay. So we had rejections here. We had price closing back inside the range over here, even after a breakout, right? And we continued the other way around. Now, the example that I do want to talk about in this video is based on a breakout. Okay, so let's get to the topic here. Now, if you are anticipating a breakout to the downside, what do you need? You need a closure below support. Okay, now support, I mark it on the bodies. Okay, so if you look at the bodies over here, this would be a support. The line I drew it here at 1813, this is the end of the zone. Okay, so support level, we will mark up support level here too, just to give you a good example. There we go. We have support running all across. Support is at 1814. The end of the demand, end of the zone is at 1813. Okay, so what do you need for price to continue going bearish here? First of all, you could look for a closure below support here. Closure below support. Next candle breaks below the zone here, looking left at 1813. We can expect price to continue towards the downside. Okay, now, why is it important for price to continue? I mean, close below here. The reason why, because what price has done previously in the past, it can simply do it again in the future. This is the problem with that. Okay, we cannot blindly come up with a probability that, hey, now this time we will break it and continue going bearish. How do you know that? Right? You're not the market maker. You don't know if price is going to continue going down or not. But how can you figure out if price is actually going to continue going down? There are two factors. One, you can look for closure below support. Okay. Number two is looking for the same setup, but this time you're looking for a break and close below the zone 2. Okay, both works, but the higher probability for the trade to work out is actually breaking and closing below the zone. If it can close below the zone, looking left like this, next candle, very high probability to continue going bearish. Okay, the issue with looking for a closure below support is, let's just say we have a closure below support at 1814, but the next candle fails to break the strong lows here. Now, since we're talking about lows, bearish candles will have strong lows, bullish candles will have strong highs. Just remember that. In any given market trend, bullish candles will have strong highs. Any given trend, bearish candles will have strong lows. So just a reminder for the people that don't know this. Okay, so once again, let's just say you look for a closure below support, which happens, right? But we don't break the zone. If you don't break the zone, the next candle could simply reject and close the other way around. And you are stuck in that. Next candle goes the other way. This is the problem with that when you anticipate this kind of moves. So you need to be very careful and look at the structure overall with a lot more details. So the detail here is based on a 5-minute time frame. This is a demand zone which happened to send the price up the first time. Looking at the price the second time, we came into that demand area, rejected. Looking at the bearish candles, we're closing within the ranges of the previous candles. Next thing you see, we picked up demand, closed above the range of that bearish candle, which is technically a breakout. You see, we're talking about breakouts here, right? There is no structure, there is no resistance in play, but we have this wicks, right? You see how the bullish candle over here happens to close above the zone. Next candle breaks the high of the previous, continues towards the upside. This is a breakout too. Remember, we were talking about looking the lows on the left hand side. We could expect price to close below there, and the next candle breaks the low of the previous, we continue going down. Same thing happening here. This is a breakout there. Okay, so now what I want to talk about is what if you don't wait for the candle to close? Okay, and let's just say if you're not expecting sells, okay, Looking left, if you are an experienced trader, you will know that history will technically repeat itself. If this is something market has done in the past, what is the probability price can do this in the future? Okay, every time coming back to it, and we have the same reactions replaying in the market every time. Okay, if you are an experienced trader, if you have been trading for a good amount of time, you know that whatever happened in the past has a very high probability of happening in the future instead of just estimating something else to happen magically. Okay, so just want to clear that up. Whatever market has done in the past, very likely it could repeat it into the future. So you need to be very careful around these things. Okay, so over here, these rejections and the lows here formed with bearish candles, these are stronger. Looking left, they were strong before, and this time they're strong again because we have bearish candle lows here. Okay, now let's just say you're not expecting price to break below support, but you're waiting for candles to close in a way that indicates the demand has formed and we can continue towards the upside again, as we did in the past over here and in the past over there. Okay, so waiting for candles to close and taking a trade. I'm going to explain it to you why you will wait for the candles to close. Okay, now looking left, this is where we picked up demand for price. Okay, you have a support right around here based on the 5-minute time frame. I'm going to highlight this in blue, right? Price closes below support, right? Technically a breakout towards the downside. Now, if you fail to see what happened there in the past, you will have issues trading that breakout. Why you will have issues trading that breakout? Because you know that this candle, bearish candle, has closed below support. Next candle breaks the low, the previous, and these lows, we may continue towards the downside. That will be our idea, most likely. But remember the first example right at the beginning, I mentioned you need to make sure what type of a range you have on the left. The range you have on the left is not clean, first of all. You have a rejection there. And after the rejection, you have a massive trend picking up towards the upside on a 5-minute time frame. Okay, so if you fail to check this, you will have issues here. Okay, so what can you do to take your profitability to a little bit better level? You will simply wait for the candles to close. Okay, when price is at these areas, we have closure below support. Next candle rejects at 1814, closes bullish. Still cannot take a trade because we are actually sitting below a support after the breakout. You will still wait. You will still wait to see if we can either take down the entire demand area below 1813 and close below it, or you can simply wait for price to reject after the breakout, close back inside over here, turning this into a new demand for price and continue towards the upside. This is why it is important for candles to close and you taking a trade on it. Okay, now what we can see is price rejects here, does not break further lows. We close back inside here. Okay, we create a support with a bullish candle, and we have taken another set of liquidity over here. Next candle breaks the high of the previous. We have a clear shot towards the upside. Looking left, bullish lows, bullish highs there, stronger highs. That could be set as your TP. Okay, so this is why it is important for you to wait for market to make a decision. And simply how you can wait for market to make a decision is simply waiting for a candle to close in your direction. So the reaction towards the upside happened because we have a false break now. Okay, we could not take down this liquidity zone on 15-minute, 30-minute time frame and 5-minute demand level. We could not take it down. We could not break it completely, close below it. That's why we could not continue towards the downside. Okay, instead what we did, we closed back above 1815. We have a bearish candle retesting that. Okay, we have bullish candle coming down over here, flips, closes bullish, right? Liquidity taken on this candle. Simply the next candle taking out the highs of the previous is a clear indication, confirmation type of trade, expecting price to move up here. So hopefully this makes sense. I just picked one example from the market based on how we had price last week on Friday. Okay, now we had one of our best traders taking trade on this type of setup. So I'm going to show you. He took it based on 15-minute time frame. So let me just go back on the 15 and show you how the 15 looks like over here. Based on 15 and 30-minute time frame, this was a demand for price, also a 15-minute, 30-minute liquidity area. So now how this is different on 15. This is different on 15 and considered a liquidity zone because the lows are formed with a bullish candle, which normally is weak. But since this candle has taken liquidity from here, this is exhaustion at the same time, liquidity at the same time, we had a reaction towards the upside. So you could expect the same in the future, but you have to observe how price is reacting there. Looking at the reaction of price, see that bearish candle there tapping into 1814, which is the 5-minute support level. Close is bearish here, forming stronger lows this time, as a matter of fact. Previous lows were weak, the new lows are stronger. Next candle, as you can see, bearish bullish candle closes back inside the range, false breakout over here, stronger lows, confirmation this time that foundation for price is getting stronger at demand. So the next 30-minute candle breaks the high of the previous, we continue towards the upside. So this is based on a 15-minute time frame example that I'm showing you, and now I will take you to the trade. He took it based on this idea, but took it based on 15 minutes. Let's check it out. Okay, so as you can see, price has taken liquidity over here. We came into that liquidity zone, bearish candle lows, strengthening this demand overall on 5-minute time frame, 15-minute time frame. Next candle, as you can see, closes bullish. Trade taken, expecting price to continue towards the upside. That turned out to be a 76 pip trade and more. Okay, so waiting for candles to close to give you a trade opportunity is one of the best things you can look for, and definitely you can take your profitability to the next level. So that was an example from our one of the best traders in our Discord group known as with Style. Okay, most of you do know him. If you don't know him, feel free to join our Discord community and interact with the best traders out there. Okay, so this video serves as an example why it is important for candles to close in the first place. If you wish to have any further questions, feel free to let me know in the comment sections below. Feel free to subscribe to the channel because you will get educated on many different stuffs on trading. Okay, and until next time, take care, trade safe, and once again, happy new year, everyone. Peace out.